Hello, friends. If you were born before 1964, I need you to pay close attention to what I am about to say, because something is changing with Social Security in July that directly affects your monthly check. Not next year, not eventually, this July. And the people who are going to be blindsided by this are not careless people. They are people who worked their entire lives, paid into this system for decades, and simply were never told that this change was coming, never told how much it could cost them, and never told what they can do about it right now before the window closes. That is exactly what this video is going to fix. By the end of it, you will know what is changing, why it specifically affects people born before 1964, what the real dollar impact looks like depending on your situation, and the exact steps you need to take before July to make sure your check is correct and protected. Before we get into the specifics, if you are not subscribed to this channel, please do that right now and turn on the bell notification. Here is why it genuinely matters. The Social Security Administration does not send personal letters when rules change. They do not call you. They do not email you. They update a policy, post it somewhere on a government website, and they expect you to already know. What I do on this channel is go through every one of those changes, translate them out of government language into plain English, and explain in real terms what each change means for your check and your specific situation. The people who are subscribed here find out about these things before the deadline. The people who are not subscribed tend to find out after the change already hit their check, after the deposit came up short with no explanation, after the decision that cannot be undone has already been made. Hit subscribe, turn on the bell, and let's get into exactly what is happening this July. Here is what is changing. The Social Security Administration is adjusting benefit calculations and review procedures for people in specific birth year ranges. And if you were born before 1964, your full retirement age bracket, your earnings history weighting, and your benefit recalculation eligibility all fall under updated SSA guidelines that take effect this summer. Most people hear something like that and immediately assume it does not apply to them because they are already collecting. That assumption is the exact thing that is costing people money every single month. Whether you are already receiving your benefit or are still in the process of planning when to claim, this change has a direct and specific effect on you, and that effect is different depending on exactly where you fall and where you are in the claiming process right now. People who are already collecting Social Security and were born between 1950 and 1963. You are currently between 63 and 76 years old. Your check arrives every month, and most people in this group have long since assumed that the amount is correct and final. Here is the problem with that assumption. The Social Security Administration has a documented history of benefit miscalculations, and they are under no obligation to proactively notify you if your payment has been calculated incorrectly in a way that benefits them rather than you. There are two specific things that people in this age group need to verify before July, and both of them require you to take action yourself because nobody is going to do it for you. The first is whether your benefit is based on the correct 35-year earnings average. Social Security calculates your monthly benefit using your highest 35 years of earnings. If any one of those years was recorded incorrectly by a former employer, if a period of self-employment was not properly reported, or if there is a gap in your earnings record that should not be there, your check has been lower than it should be every single month since you started collecting. One incorrect year in your earnings record reduces your monthly benefit by approximately $90 to $110 per month. Over 5 years of collecting, that is between $5,400 and $6,600 that should have been in your check and was not. The way to check this is to go to ssa.gov, log into your account, and open your full earnings history. Compare every single year listed against whatever documentation you still have. Old W-2 forms, tax returns, pay stubs from former jobs. If any year does not match what you actually earned, you can file a formal request for correction, and SSA is legally required to review it. Do not assume the number on your statement is right just because no one ever told you it was wrong. The SSA processes what was reported to them. Errors happen, and they stay on your record until you correct them. The second thing for this group is verifying whether you are on the correct benefit type entirely. A significant number of people in this age range, especially widows and widowers, are collecting their own retirement benefit when they would actually receive more money every month on a survivor benefit record. The survivor benefit for a widow or widower can equal up to 100% of what the deceased spouse was receiving at the time of death. In many situations, that figure is substantially higher than what the surviving spouse currently receives on their own record. If your spouse passed away and you have never specifically asked SSA to compare both figures side by side and put you on the higher amount, you may have been leaving money on the table for years. Call SSA directly at 1-800-772-1213 and ask them to pull both numbers and compare them. That call is free. That comparison takes minutes. And if the switch applies to your situation, it is permanent, and it begins with your very next payment. Group 2, people born between 1958 and 1963 who have not yet claimed. You are between 63 and 68 years old, and the decisions you are making or about to make are permanent ones. If you claim Social Security before your full retirement age, your monthly benefit is reduced, and that reduction does not go away. If your full retirement age is 66 and 8 months, meaning you were born in 1958, and you claim at 62, your benefit is reduced by approximately 27.5% for the rest of your life. On a benefit of $2,000, that is $550 less every single month. Over a 20-year retirement, that reduction totals $132,000 compared to waiting. The SSA will process your early application without stopping to walk you through what that reduction actually looks like in real cumulative dollars across your lifetime. They ask if you understand your benefit will be reduced. You say yes. The reduced amount becomes your permanent check. There is no reversal. For people in this group who are past their full retirement age and still have not filed, every additional month you wait earns you 2/3 of 1% more permanently. That adds up to roughly 8% per year. Between your full retirement age and age 70, delaying can increase your monthly benefit by 24 to 32% permanently, depending on your exact birth year. On a $2,000 benefit, that is potentially $640 more every single month for the rest of your life. There is also an option almost nobody in this group knows exists. Once you reach your full retirement age, you can request up to 6 months of retroactive benefits. SSA will pay you as if you had filed up to 6 months earlier, which means a lump sum payment deposited with your very first check. On a $2,000 monthly benefit, that retroactive lump sum can reach $12,000. The option is real, it is available, and almost nobody asks for it because almost nobody knows it exists. Here is the summary of what you need to do before July. If you are already collecting and were born before 1964, log into ssa.gov and verify your complete earnings history year by year. One missed or incorrect year costs you money every single month. If you are a widow or widower and you have never compared your personal benefit to your survivor benefit amount, call 1-800-772-1213 and ask SSA to run both numbers for you right now. If you have not yet claimed and are approaching your full retirement age, make sure you understand in precise dollar terms what an early claim permanently costs you before you file anything. And if you are already past full retirement age and have not yet filed, ask SSA about the retroactive lump sum option before you submit your application. None of these steps require an attorney. None of them cost you anything. Every single one of them is available to you right now, and July is close enough that now is exactly the right time to act. Subscribe, share this with someone you know who was born before 1964, and I will see you in the next one. One more thing before the summary, and this is specifically for people in this group who are currently collecting Social Security before their full retirement age and are still working at the same time. The earnings test is something the vast majority of people collecting early have never heard of, and it is the reason some checks in July will come in lower than expected without any warning or explanation attached. Here is how it works. In 2026, If you are collecting Social Security before your full retirement age and you earn more than $23,400 in the calendar year, SSA withholds $1 from your benefit for every $2 you earn above that limit. If you are earning $35,000 a year while collecting early, SSA withholds roughly $5,800 from your annual benefit, spread across your monthly payments. Your check drops. And if you do not know this rule is happening, it looks like an error. It is not an error. It is a policy that most people collecting early have never been informed about. The important thing to understand is that the withheld money is not gone. Once you reach your full retirement age, SSA credits back the amount that was withheld and permanently adjusts your monthly benefit upward to reflect it. But knowing that in advance, planning for it, and not being caught off guard by a smaller deposit in July is the difference between a stressful situation and a manageable one.